I'm Matt Bouchard with NAREIT's REIT.com. Joining me for this episode of Fundamentally Speaking is Calvin Schnure, NAREIT's Senior Vice President of Research and Economic Analysis. Calvin, thanks so much for joining us.
Nice to be here, Matt.
Now let's start by talking about the recent economic news, which has been a bit of a mixed bag. What do you think investors should take away from it?
Well, obviously, we saw a big slowdown in GDP growth. The fourth quarter came in much weaker and was just revised down. This is after 6 months where the economy was really gaining a lot of momentum. In some ways, this is kind of like the recovery we've had all along. It's uneven, but it's gathering strength. But what's really important is it's got a lot more strength than it did just a year or two ago. Look at job growth. Job growth had been averaging less than 200,000 a month. It's been up in the high 200s, even exceeding 300,000 for the past 3 months. This is a really solid fundamental for the economy going forward.
So then what are you on the lookout for going forward?
There are four things on my mind. First is how strong is growth in the rest of the world. Europe has struggled quite a bit, both with their overall euro area wide, and especially what's going on with Greece. We've also seen slower growth in China and a lot of other Asian countries. That hurts U.S. exports. It hurts U.S. exports, hurts U.S. production. That's not something that's going to turn on a dime. It's going to continue dragging the U.S. economy. The second is the stronger dollar. Part of that's been the dollar is a more attractive area to invest than the rest of the world. That's also hurting our exports, but it's helping consumers, and it's also helping hold down inflation, which is something the Fed's been looking at. The third is lower oil prices. Now, anytime you go to fill up your tank, you know the benefit that you get personally. It also helps the overall economy because it gives the consumer sector the momentum going forward. Now, it's not all positive. If you're in Houston, if you've got commercial real estate in Houston, you're obviously looking at a less favorable picture than you were beforehand. Some of the other areas, North Dakota, the extraction areas are going to suffer, but overall it's positive for the economy. And then the fourth area is just higher interest rates. We've gone from a debate about if the Fed is going to raise rates to when and how rapidly are they going to raise them. 2015 is pretty clear. We're going to see a change in the interest rate environment.
So those four factors have led to a solid 2014 for commercial real estate and a pretty good start to 2015. How do you think they're going to impact REITs and real estate going forward?
This is actually quite a favorable environment. It's not without risks. There will be some bumps in the road, but overall the fundamentals are going to support the economy through any of the bumps in the road. You know, the interest rates are a good example of the type of risks that are out there. And interest rates are a real fundamental for real estate because the current value of future rent receipts depends on what the market interest rate is. And also, if you see interest rates going up, it's going to raise the long-term funding costs for a lot of investors. But in a market like this, where you have a healing economy, a growing economy, rising occupancy and rising rents are going to beat rising interest rates every time. And that's what's likely to happen with REITs and with commercial real estate. We're not looking at a sharp spike in interest rates. We're looking at the Fed gradually bringing rates back to a more normal rate. Now, you're going to have some concern, some volatility as market expectations adjust to the Fed timing and pace of interest rate increases, but it's not something that's going to derail the long-term picture of a healthy recovery for commercial real estate.
Calvin, thank you so much for your insights.
My pleasure, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.